It's time to take a look at your money here on Good Morning Quad Cities this Monday morning. Let's take a first look at how the stock market is doing. At the end of last week's trading, S&P 500 down a little bit more than 2%. The NASDAQ down about 4.5%, and the Dow Jones Industrial Average was down about 1.5%. Joining us this morning is our financial expert, Mark Ravicheski from the Quad Cities Investment Group. Mark, on Tuesday, the latest Consumer Confidence Index was released. That reported confidence among American consumers reached its lowest level here in 16 months. So what exactly does this mean, and what insight can it provide for consumers?
Well, the Consumer Confidence Index, is a monthly gauge of consumer optimism. It has, I think we have a graph coming up here, but it has a benchmark of 100. So any index level above 100 indicates an optimism by consumers on their future outlook on jobs, on income, on the economy. And conversely, any index level below 100 actually conveys a pessimism. Now, in June, the index was reported at 98.7, which means that consumers are no longer optimistic on their future outlook. And the importance of the Consumer Confidence Index, Josh, is that consumer spending is the main driver of the economy. In fact, it accounts for more than 2/3 of all U.S. economic growth, and confident, optimistic consumers, tend to spend their money more freely, which again, really tends to drive that economy forward.
No, obviously there are kind of a number of challenges that consumers are facing right now, but in your opinion, is there a key factor behind what's kind of declining confidence right now?
Yeah, well, for much of 2020, Josh, and really even into the initial phases of 2021, consumer confidence was heavily influenced by the pandemic. In other words, as the number of cases of COVID-19 rose, we saw this corresponding decline in consumer confidence, and we have this graph up here, and we saw that back in the early phases of the pandemic in 2020, and even a little bit later on during that Delta variant spike. But over the last 12 months, consumer confidence is being driven by inflation. And we see that over the last 12 months, as inflation continues to rise, Josh, we see this corresponding decline in consumer confidence. And as we just pointed out a little bit earlier, June's report of 98.7, again, signifying, actually a pessimism. And is it any really surprise that inflation was just reported at 8.6%, the highest level in over 40 years, going all the way back to 1981, Josh?
Yeah, and we've been talking about inflation a lot here. So why do you think inflation is playing such a big role in the level of consumer confidence?
For me personally, look, inflation directly impacts you. It directly impacts your family, and it places just a tremendous strain on financial budgets. And this high inflation is costing the average American household an extra $5,500 a year in higher costs. And for low income, for retirees, and for many middle-class Americans, Josh, it creates a financial hardship. Even basic necessities like food and clothing and housing and transportation. Just look at all the record high gas prices we're seeing. A lot of these basic necessities are now becoming unaffordable for many Americans.
So let's think a little bit into the future here. We were talking a little bit before.
You're wanting me to bring out my crystal ball, aren't you?
I'm wanting you to. How long can we be thinking we're going to be seeing this inflation? How long can we expect this?
My crystal ball is in the shop. I should get it back in a couple of days.
Well, we'd like you to bring it back next week.
We'll see what I can. But here's my thoughts on the future outlook of inflation, Josh. Whether we've seen this, proverbial peak of the inflation cycle, we just don't know. Let's see how things pan out over the next couple of months. That said, though, Josh, inflation is expected to remain historically high for quite some time. But now what we're seeing, though, is that timeline for when we expect inflation to return to a more, normal rate of inflationary growth. That timeline is now being pushed back farther and farther. We now expect inflation to remain historically high for most, if not all, of 2023.
Wow.
And potentially even into 2024. So this inflation is going to be with us for quite some time.
All right. Mark Gravicheski, thanks for joining us here this morning, and thanks for your expertise.
Great to see you again. Happy July 4th to you as well.